All right, good morning. Welcome to another Wednesday. I hope you're doing well. So, we have the month of August upon us, and thank you very much. I actually had a very restful night, and I'm all fired up for this morning. So let's begin. Dollar index. Basically, we had some kind of a retracement. Something that I anticipated, and that has been a blessing because I had some beautiful trades with that movement yesterday, and I shared what I can share with you guys. That was the buy that I shared in the Telegram channel, right? The others, they were more of it was happening in the moment, so you had to be like literally in front of the screen, and then when you see it, you take it, right? So this movement here was predictable. Predictable in the sense that if you do have seasonal tendency, you will know that this was coming. And I do preach seasonal tendency all the time. I always show it to you guys as well. It was showing that there was a potential retracement coming in this week, right? Plus, it was a seasonal move that always sees dollar index after the end of the month of July. It sees the dollar index kind of retrace. Okay, so this is all kind of predictable. So I'm still looking for a movement up in here. That's the level that I'm looking for price to trade to. So I'm anticipating a run above that high. Whether we get that, I don't know, but that's what I'm anticipating. So I'm going with short-term bullish on dollar index and then bearish on the foreign currencies, right? So that will give you euro to drop. Yesterday was a beautiful day. I actually caught not euro, I caught the British pound and the Aussie and the New Zealand. I caught 3 of them and I left euro alone because euro pound was kind of trading up, so I decided to go with the pound. I should have gone with both of them anyway. Looking at the high time frame, the daily time frame, we have put in a swing high, right? So that means for the near term we might see some kind of a decline. So I'm favoring liquidity below this and liquidity below that as they draw on, or basically where price is supposed to go, right? So you can look at this low and that low as where price is supposed to go going forward. Okay, so you can trade pullbacks, you can trade optimal trade entry if it makes sense to you. Okay, you don't have to take it if it doesn't make sense to you. So you only take trades that will make sense to you, and then you apply any kind of understanding in your own trading that makes you go bearish. Say you wanna, this is the drawn liquidity, right? And price is here. Okay, so based on the drawn liquidity, what can you use to take a trade to trade down here? That's what you have to do. I use several things, right? One of them is OTE, time of the day, price level, institutional price level, and then a combination of fib as well, fib projections. So I incorporate all of that to get me a level where I want to get in. So for example, if I put the institutional price levels, right, we have 1.0200 over here, right? And if I pull the fib from this high to that low, it doesn't fit as an OTE. If I look at the H4, there is a gap here, so I can use the idea of this gap plus that and then time of the day, right, to see if I can get a trade in here to take me for this liquidity on the downside. Okay, that's my approach. It might not be what you like, so that's why I'm saying this is the drawn liquidity. You apply what you think should get you in to get there. Okay. British pound, I got a nice sell-off here yesterday on the 1 hour time frame. Oops. I still have a partial on because I'm anticipating this level to react and reject. So I still have a partial on. Maybe I might take an entry in here using time of the day and the price. I want to see some kind of a rejection on the lower time frame before I do that. Right, it's 9 o'clock. We've gone just outside my entry time. Right, we've just gone outside, so I want to wait till we get some kind of a rejection. Now I can take a trade right there because it fits me to take a trade like this. Okay, and there's nothing wrong with that, but because I already have a position over here, I want to look for lower time frame confirmation. So maybe this, and then I'll sell short. Okay, so that's what I'm looking for on the British pound. If it doesn't give me it, I'm not, it's not compulsory to take a trade because I already have a trade on and I've taken partial yesterday here. Right, I shorted up here and took partial there, and my ultimate target is to take out previous week low. So I'm waiting for a potential entry again. I like this short-term low created. Once it's broken, that is a sell. Okay, New Zealand dollar, this is the trade I took yesterday. It looks perfect, but yeah, it was shared with my people in the community. I took partial over here and then I left the rest and then closed everything down here. This morning, this is the level I was anticipating, but again, you can use this and just choose and just go short. And again, previous week low is the target, so this low here, and we do have an institutional price level there, so that's good. You don't have to take the low, you can take this, right, as your target. So two potential trades, British pound and New Zealand. Oops. Yes, using not price level, but using just the OTE and time of the day. Okay. Aussie, same thing. I got a sell off in here. London close. Okay, let me talk just a little bit about this one. So initially I shorted during the New York session, and I left my stop loss just here because I didn't want to see them trade above this imbalance, right? So I shorted there, and I was also using the price, right, as a form of resistance that we should get there and don't breach it with the gap, and also having this down candle over here. And what ended up happening was that they took me out. So once they took me out, it went into another imbalance here, and again I went short in there because one, I'm expecting higher prices on dollar. So it's either they're trying to push just a little bit higher before going lower, and my stop loss was just too cute. I was trying to save a lot of, let me show you what I was trying to do. I was trying to get more risk to reward. That's basically what I was trying to do, and my target was this low. Okay, so because if I do this, right, the risk to reward is not great, so I did that to get at least 3-1. And then what ended up happening is that they took me out, so I took this one and I left my stop loss above that, and then targeting this low. Now it took me in, partial out here because there was a gap overnight, and then I left the rest. So I'm still in this trade looking for price to attack this low. Okay, so that's my draw on liquidity. And this morning we also have this, so you can use that as another potential trade. Okay, so you have 1, 2, 3 trades. Oops. If you want to, okay, you don't have to take all of it. Trade what makes sense to you based on the way you trade. The next one is dollar CAD. Dollar CAD, I just got an entry this morning using time of the day, price, and the fib. Right, we retraced to OTE, reaction, formed a swing low, so I entered on this candle. As this candle opened and it traded down, that's why I entered long. So I'm kind of looking for price to take out this high, and then push my stop loss to break even, and then whatever happens happens. Okay, so dollar CAD, I'm looking for a run above this high. Right now, why that high? The idea is, if you look at, and this one might give you some insight. Let me turn this one off. Okay, whenever you have, let's say, price take out a high and then price goes down, okay, this high becomes important. We want price to stay bearish, but if we do hit a high time frame level and then we have a change, then what end up happening is we now have this low in control against that high. So whoever shorted up here, right, their stop becomes important for these guys to go and attack it, because if we especially if you've hit a high time frame. It's not okay, price is going down and then it did this and it's coming up. That's not what I'm talking about. I'm talking about when it does hit a high time frame level and then it causes this. Okay, that's when you look at this high as the draw on liquidity. If we've not hit any high time frame level here, then I'll anticipate price going up into, not here, but this low, back here, and then back down again. Okay, so with dollar CAD, we did hit a high time frame level. I need to. Is it raining? No, it's not raining. Right, so this is the high time frame level. Right, that imbalance. Plus, if you pull your fib, right, 618 optimal trade entry. So it's an important level, and then we broke market structure. So if we have with this, if we go back to the 1 hour time frame, then you see what I'm referring to. So we have a run below this low, and then we change direction, and then up here we have a run above that high, and then we went down. But this one, it did not come off from a high time frame level. We were already bearish, and then that happened. So liquidity above this high is going to be important, and we have a gap just above it. Now this one is important because that's a weekly high. Okay, not this one. That one is a weekly high. So this one is going to be a high time frame level. This one is in between. So the liquidity above it is going to be sort of I don't know how to describe it. It's price will go for it. Let me put it that way. Price will go for it. All right. So that's where I'm anticipating them to go. And then above that, maybe you might get rejection above it. All right. Maybe you might get rejection above it. Now, what will make me wrong is if we come back down here and close below this low, then I'm wrong. We will not be taking up that. Maybe then this fractal here wants to send price back down. But as long as this low is intact, I'm looking up here. For now, this is the level that I'm targeting, and then up there. Okay, so that's dollar CAD for you. Euro pound, this is going sideways for now, so I'm pretty much neutral. It's not moving up or down. Last week after market closed, I was looking for price to come up here. Right, I was looking for price to come up here when the market closed on Friday. So I started this week off with being bullish for price to come up here, but price action gave me something else. So I'm currently on the sidelines. I'm waiting for more information, and pretty much we do have rate announcement, I think, on the British pound tomorrow, Thursday. Yeah, British pound has a rate announcement tomorrow at 12 p.m. They want to increase the interest rate from 1.25 to 1.75. So I think that's why this is going sideways, because it's waiting for that news event. Right, so leave it alone, don't touch it, and trade something else. Okay. Gold. So gold, I anticipated a sell on gold this week because of the seasonal tendency. Gold usually makes a low. Let me check. I still have it open. So we do make a low on the 5th of August, so Friday. So what I'm looking for this week is gold dropping into some form of a discount, right, relative to the dealing range that we've created here. So now we do have a dealing range. If you don't know what a dealing range is, this is a dealing range. Oh, sorry, I'm bad. Here first. Okay, this is a dealing range. Because it's bullish, I'm looking for price to come down and then go back up. So this is similar to what I was trying to explain on the CAD. This high, right, because it's not coming off from a high time frame level, it can be taken. Whilst this low, it's coming off from a high time frame level, so I don't expect that to be taken. Plus it's going up. So if you look at gold on a 1 hour time frame, you will see what I just drew. So we have this low, or you can use just that one, taking that big candle is the signature, and then here taking that candle being a signature. So that is your dealing range. So because of that, I'm expecting price to first of all trade to 50%, and then maybe OTE for this week, and then next week I will expect price to rally again. All right, so that's gold. I'm anticipating price to drop. Let me change this back to what it was. Let's go back to the daily. Okay, so that's gold. Now we do have a breaker here and a gap. So if we do trade up in there, that's a sell. That's if it does. If it doesn't, then you missed it. You can also use OTE. So you have to find an entry. I can't give you an entry. Alright, 50% is here. OTE is up there. So if you want to go short, you can use 50% as the breaker plus the gap. And I think I've shared this one with you guys. Maybe not. Maybe it was the private group. But breaker plus gap and weekly profile, you can use that. Okay. Crude oil, I'm looking for a run back down to these lows. Oh, this is making not unattractive. There you go. It looks cleaner now. We've actually formed a swing high on the daily time frame, and yesterday was an inside candle, so I'm expecting expansion to the downside. We have low resistance over here, so I'm expecting a rundown. Now they've taken out this high and rejected, so look at this low. Again, something for you to go and study or back test. If we have a high is always what connected to a low, right? There cannot be a high without a low. So if we have a high and price takes out the high and then it breaks down, that high the low that is connected to the high will be the draw on liquidity. I'm gonna repeat. If you have a high and it has a low, because a high has to have a low, and price takes out that high and it breaks down, that high that was taken connected to this low will be the draw on liquidity. Go and back test it, and then you see for yourself. Most times it's just very easy to kind of predetermine where price is going based on just this, because if we've taken out the liquidity up here, if you truly understand what's happening in terms of high level trading, smart money wants to accumulate shorts up here, and then when they want to get out, they have to distribute it somewhere else, right? So that somewhere else would be a form of a low, not this one, because this is the position that they use to go and clean out or to claim the sell. So this is not where they're gonna take out the profits. They're gonna take it somewhere else, which is this low. Okay, so anytime you see a short-term high being taken and it breaks down, find the low that's connected to that high and look for price to go and attack that here. It might not give it to you 100% of the time, but if you do it, you see most of the time you will get, especially if you apply direction to it, right? If you apply what I just shared is not based on direction, but if you apply direction to it, then you do have yourself a really nice I would say trading system, but a nice way to get some trade ideas, either scalps or day trades. You can easily find these kind of trades. Let me see if I can show an example. Where is it? Aussie cat. Yeah. Go to the 1 hour time frame. Okay, so we have this, that, this high. Price takes out this high, right? This low is connected to that high. So once this is taken, or that once this is broken, price is gonna go and attack this. Okay. Let me see if I can find an example. Even here, this high. Let me zoom in. Right, that high taken. Where's the low? Here. Taken. This low taken. Where's the high? There. But I'll leave you to go and back test it, because it will make more sense to you if you back test it and you see it for yourself, because me pointing it to you might not give you that aha moment. Okay, so you go and back test it and then you see. Okay, Bitcoin. Any crypto fans over here? So Bitcoin, I think we are going higher. I've I'm sticking with my buys with the drawn liquidity being this low, right? And we keep making high highs and lower highs. So as long as that's intact, this is the level to look for price to reach. And we do have this imbalance closed in, right? So it might be price wants to go a little bit lower before going up again. What changes that is if we close above any form of a candle to the downside. So as it's going down, it can keep going down until we get to discount. So we did hit 50%. Discount is below 50%. And in discount, what kind of level do we have? We have a void, right? We have this big void. But in that void, there's a concept of a balanced price range. So the balanced price range will be this candle's low here. So that's the balanced price range. So at least if it wants to go lower, I'll expect it to get to here, right? And then a continuation to the upside. If it decides to go lower, right now, because it's still bearish, you have to wait. If you're looking for a buy, you have to wait for market structure to break. So maybe market structure can break here once we go above that high, and then you look for buys to continue going up. If it doesn't, then leave it, let it get down here, and then you look for the buy. Okay, so in terms of lower time frame, this is how it looks like. Price can trade back to this level, and then it gives you a potential buy, or it has to break using the equilibrium price point. It has to break, and then we look for the buy to continue going up. And that will be the same thing for Ethereum. Right, 50%. On the daily time frame, we are yet to break higher. So since they are brothers or cousins, you use the same thing. If you get down here, then you look for the potential market structure break, and then you look for the buy. All right, so that's pretty much it over here. Let's go back and check some of the trades, because we are in London, so they will react. Oops. Okay, let me check the 15 minutes. There you go. 15 minutes is breaking structure, so that's good. I need it to close and leave that gap. If it closes below that, if you went short, you are privileged. You're already riding some profits. If you didn't, and you were looking at me, if you're looking at me and the way I trade, then patience is going to be required, right? This one, it's yet to break it. That one is yet to also break that. So pound is ahead. Let's see. I think euro pound is going up. That could be why. Okay, let's move on. Let's go over here. Let's start with dollar CAD, because that's a pair that I shorted yesterday. Same thing, right? Now, I did put a topic, short-term trading, for today. So that will be kind of the discussion that I'll kind of talk about once I finish going through what I'm looking at. But this was a nice trade, run above previous day's high, London session, breakdown, breaker, fair value gap, boom, sell short, and get out. Okay, easy trade from here to here yesterday. And then today, what I was looking at is this imbalance to now at least take out this low, but in kind of deeper retracement wise, this is what I'm looking at. Remember, I just taught you, or if you already know, what a dealing range is. Okay, so this, that, and this I don't know what my son is doing. And we have this, that, this, and then that. So we do have this low to that high as our dealing range. Okay, so let me let me close the door. Okay, so we have this to that as a dealing range. So if we do have a dealing range, if we do have a dealing range, we can measure and see where price can trade to. Okay, so we are yet to trade to 50%. We have discount down here, and we have liquidity sitting right here, and imbalance that if they want to rebalance anything down there. Okay, so because of that, applying time of the day, price, right, price, time of the day, London, and the fact that we have a dealing range, price is gonna do what? Continue to drop to discount. So price is gonna come here and then potentially go for that, but ideally that is a trade to come down to 50% and then take out this low as well. That is OTE. Now, because it's a bullish dealing range, and what I mean by bullish dealing range is that price is bullish. Okay, it's going up, so we don't want to trade beyond OTE. So we can get it to trade to 50%, that's fine. So selling here to 50% is fine. We can get away with 618, that's also fine. But beyond that, you're asking for trouble, because you can hit this and then go back up again. Okay, so you don't want to trade that. So you trade up to maximum, that's what I do, 50%, and then I'm out. If I do see the potential, especially if you have seasonal tendency with you, if you have the futures market with you as well, then you can kind of hold on to some trades, not take extra trades. You can hold on to some of the position and then and see if price is going to trade down there. Okay, but if not, then just trade to 50%. Try to understand dealing ranges, and what I'm showing you can be used to take trades on a weekly basis. Essentially, look at the trend and then identify on the 1 hour time frame. Always use 1 hour. Where was the last time there was a stop rate and price went opposite direction? Okay, so for example, here we had, this is the beginning of the move anyway, but this is a rate, price went up, came back down, so that's a bullish dealing range. Price comes back down, it's gonna attack this high. and then we also have this, and then price broke up. So this level is unmitigated, right? So price in future can come here, and then we had this one. So that's why price can come here and then go up again. All right. So you don't have to take it. I'm just showing you or teaching you something that in future, if you want to trade and you do see it, you can get confidence and trade it. These institutional price levels, I've made it available on TradingView, so you can go and use it on your charts. Okay, it's free. You don't have to pay anything. I could have charged you guys, but it's free. Okay, so that's what I'm looking. If I was to tell you exactly where my TP is, I'm looking for that, but I'm gonna partial out here. Okay, I'm gonna partial out here, and then I'll leave the rest to see if we can get there. My reasons for doing that is because I have seasonal tendency with me, and then I have the futures market with me as well. So what I mean by the futures market is, if you look at the relative, the relationship between the British pound and the CAD. This is the British pound, this is the CAD. On a H4 basis, this one is currently inside a gap. This one, there's no gap down here. So on a H4 basis, this can go lower. On the H4 basis, this one will struggle to go lower. And if you look at the lows, right, pay attention to this low. Okay, this one. Notice that it's, I know I'm looking at 4-hour, but notice that it's low resistance in nature, versus here, if you see what I've done, this and that's high resistance, this and that's high resistance. So there will be a possibility that this one will struggle to go down, whereas this one will find it easy to go down. Why? Because if we do have relative equal lows, the market find it easier to attack those than when we have high resistance. So we have high resistance here and then high resistance here. Okay, so this and that is high resistance. That's why price is, there. It's not going down. Could have gone down, but it's not. Okay, so that's strength for British pound. I'm sorry, for the CAD. Plus, the seasonal tendency also calls for that strength this week. Okay, yes, you do get that. So that's why I'm kind of holding some of my position to see if we can get for this equal low. And it's a similar pattern that I traded yesterday with this one. There you go. Taking out that low. Brilliant. I'll see if I can take a trade if I don't miss it. It's a similar pattern I traded yesterday. So if you go into the 1 hour time frame, if you look here, raid, breakdown, gap, low resistance, right? And then we hit it there. So that's the same thing here. Raid, breakdown, low resistance. Right, so that's what I'm anticipating that. I understand there's a swing on the daily. That's why I'm not looking for this. Okay, there's a swing on the daily. One thing that I'm gonna share with you guys, a secret that I learned somewhere. Okay, I learned somewhere. Think about price like this. It's a pattern, okay? Okay, think about price like this. If we have a low here, when I say low, you know what a low is. If we have a low here and we form another low, and then this low breaks this high, okay, you want to anticipate another low forming here to take out this high. Now it looks basic, okay, it looks basic, but it's very, very powerful. Okay, it looks basic, but it's very, very powerful. You need to understand. The understanding will come with experience if you keep doing it over and over again. So think about it this way. If price forms a low, okay, and then we form another low, my ICT teaches this as the way that his mentor Larry Williams used to classify short-term lows, long-term lows, short-term highs, long-term highs, something like that. But this is what I'm trying to show you. Okay, so we have a low here. That low obviously will have a high. So think about price like this. Okay, so you have a low here, and then price makes a low below that low, and then it makes a high. When that happens, you want to anticipate a low forming here to go and take out this high. So in a diagram form, you can look at it this way. And then we want to anticipate a low forming here to go up. So when you kind of zoom out in price, it will become obvious to you when these kind of ideas is trying to set up. So if you go to CAD, right, this is what I'm trying to show you here. So we have this low, we have this low, and then we make a high. So think about it, that this, that. So we want to make another low somewhere in here to go up and take this high. That's the concept of OTE. So you can anticipate a low forming in here. So whether it's going to come to that OTE level, whether it's going to go to the 70.5 level, you want to anticipate a low forming to go up. Okay, and that's something I learned somewhere. I think it was last year. Yeah, last year. I learned it somewhere. So it kind of helped me to look at price with that perspective, that if we, for example, we have this high, we made a high and we went down, we went only to the breaker. So price can come here and then give you a reaction. It's not going to go down, okay, but it's going to give you a reaction. Why? Because we are yet to form a high over there to complete that fractal. So if this hits this level and it comes up, I'll anticipate a retracement here, and then I'll use that same idea to buy and then go and attack that high. Okay, so that is that on this. So the same idea is what I used to give you guys in the Telegram, right? So now you know it. So we have 1, 2, 3. So it's a swing here, it's a swing here, and that high connected to this was taken by this swing. So price is gonna form a swing here to go and attack this high. And that was it. So that's that pattern that I've just taught you. Okay, so whenever you see that pattern, anticipate a similar sort of, I'll say it's gonna give you a dynamic move, but anticipate some kind of a rejection from that level. So if you're short and it's going to a level where it has this, you can call it head and shoulder pattern, but say you're short and you're long in a bullish market and price is going up and it has this pattern there, don't hold on to the trade thinking you're gonna make a new high like that. If you do that, you are being naive. Anticipate that it's going to retrace, okay, and then push through it. So that's why I gave you that, and the reason why I gave you that level as the target is because of that. Okay, where we have went down, so this area is going to be sensitive. Even though we did move away from there, we still have this all open. So when you apply smart money or understanding in gaps and auto blocks to it, it means that here is still exposed, that price can come there and still go down. Why? Because obviously it's a gap, it's an auto block. Okay, so then price is gonna react like it did, and that's tradable as well. Okay, let's look at the yen pairs. Yesterday was amazing. I caught the dollar yen down here on a 1 hour time frame. I caught it here, and I missed this one. I was asleep. Should have been awake to take that one too. So I'm anticipating a run. So we have a dealing range over here on the 1 hour here. This high taken, price went down, 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 down. We didn't have a dealing range down here. Now that is a very good thing, because this not having a dealing range down here, what I mean by dealing range is, since we did not run stops before coming up, that is going to be the draw on liquidity once we get into premium. So I'm looking for price to come up to go down next week, not this week. It might happen this week with NFP, but ideally I want it next week. So I want to see price trade a little bit higher, maybe here or there, and then I anticipate some kind of high being raided to solidify that we are not going to come back up again, and then I'll look for price to drop. I missed it. You guys owe me some change because I missed my trade, but this is good because I already have a position on. Anyway, okay, so I'm looking for higher prices. Same thing with cards, I'm looking for higher prices. Same thing with euro, I'm looking for higher prices for this week. So all the yen pairs, I'm looking for higher prices for this week. All right, So we are looking for price to trade into premium relative to the dealing range. So you need to learn how to identify dealing ranges. So this is the range, high, this is the low. So we are looking at pulling the fib from here to here. 50% is here. Okay, so you can take buy ideas to get to 50%. And then you do that for all the yen pairs. Identify the dealing range. This one is on the H4. So this high to that low, 50% will give you roughly somewhere here. That's a big circle there. So you can trade up to 50%. Aussie yen, same thing. Okay, we do have here. I would have preferred that one. I'll use this. It's the highest one, and then this low. So you're looking for 50%, which will be in here. Almost there. Okay. So that's the yen pairs for you. Let's go to Aussie Swiss as someone was requesting. So Aussie Swiss, let's start from the daily time frame, because what I was expecting for this week was that as a target. It's a previous week low, this low, and we also had this auto block here. So it makes sense, the reaction on the daily time frame. We do have this candle closing below that. So inside this range is where this imbalance exists, and we did have the H4 making lows. So I'm sticking with that H4 trend, and this to me is a pullback. So I will anticipate price giving me something like this and then selling short. So wait patiently, let it wait patiently, let it give you a break in the structure, at least on the 15 minutes, and then go short. Okay, so it's just pulling back, wait for a breaking market structure, and then you can go short. I like where it's currently at, as you saw. Yeah, it doesn't want to, for some reason, whoever coded this didn't do it properly. I always have to extend it when it does that. It's trading back to this institutional level, time of the day, in a bearish trend, right? So just wait for, either you can use OTE, which if you want to, you can definitely, or you can wait for break on the lower time frame before you go in, or you can wait till New York session. Maybe New York session will give you, by New York session, it will give you a better feel of what price is trying to do. Okay, let me go back and check gold. Okay. Oh wow. I actually got an entry. I didn't know that. I had a sell limit on British pound on one of my accounts on OTE. Actually, I probably said it yesterday, I didn't see it, but it triggered me in. Nice. So I am short. I got an entry, yay, on OTE. I did it last night, I forgot. So it triggered me in. I just went to check my account and I saw I'm in profit. I'm thinking, what trade is that? Let's go and look at how price react on weekly time frame, please. USD CHF time frame analysis. Okay, let me read the question you sent me on Telegram before I do that, because I know you sent me a lot of questions, but I was not awake. So you had a sell set up on Enigma. Seems so small, stop loss. NTP, not as usual, thanks. A sell signal on, let me go and check it. New Zealand dollar 1.0 I don't have a sell signal on 1.0. Let me check this one. Is it New Zealand dollar? I don't have a sell signal on New Zealand dollar on either, so I'm not sure. Okay, I'm not sure where you got that signal, but it's not showing on mine. Okay, it's not showing on mine. No, it's not showing. It's not showing, so I don't know. Hi, welcome. It's not showing on mine, so I'm not sure about that one. Let's look at the other question. Okay, so it's related to Asian range. I don't have it, so I can't tell. New Zealand Swiss sell setup. Please comment on target on weekly time frame. What is possible next target? Cause that one on the left for it's already taken. Target liquidity 27th June. So that one is taken. Yeah, you need to do the analysis. You need to do the analysis on the computer. If you do it on the phone, it's just too it's too small for me to see it, right? So try to do the analysis on the computer and then send that screenshot instead, because then I'll be able to see it properly. With the phone, it's hard for me to see what you're trying to refer to. Okay, but you wanted to see what the drawn liquidity is on New Zealand Swiss based on the weekly time frame. So based on the weekly time frame, you said that this low has been taken already, so is it gonna take out this low? And the answer is yes, that will be the low to target. It's low resistance in nature, so that will be the low to target. So let me see when that can happen. I think next week. Next week. Next week will be, let me check the seasonal tendency. Let me check the oracle, what the oracle is saying. So New Zealand, this is this week, next week. Yeah, so basically from today, 3rd, we should have a drop till next week. So yeah, it should happen between today and next week. That'll be the drawn liquidity. I actually missed the trade on that yesterday. Yesterday I wanted to sell short that level. If you remember, we talked about this. I wanted to sell short because it did not touch this order block, right? Monday session that we had with FX Mastery, I touched on this. I wanted to sell above this high, and that didn't happen. So I'll still look for price to continue going lower. Let's look on the daily. It might take out this high. It might take out yesterday's high. It might take out this one before going down.
Daddy, the pipe is a fake. The pipe is a fake.
Okay. Right. It might attack this high before doing that. So be aware. Let me see if we have any reference. Okay, there's nothing in there. We have the 20 level. Watch that high, previous day high. If we don't reject this order block here, right, watch that high. But I'm not, because we did move away from, where is it, here. Yeah, because we moved away from that level and target this low for this week, I'm gonna be patient. Why? Because this pair, it likes to consolidate a lot, right? It likes to do something like this. So if you catch one trade, okay, go pick it up. If you're not careful, right, you might think that you're gonna catch these trades. At some point they're gonna raid. Okay, sorry for that. My son keeps going in and out, in and out, in and out. I'll wait for some kind of a high to be taken, because they've just taken out this low, right, and it rejected. So previous day high might be the strongest level for price to take, and then it might give you a reaction. Can you help me remove whoever that person is? Because they're spamming the chat. Alright, just remove them for me, and so I can carry on. So the question was, could you check why? I'll have to do it after the session, right? The New Zealand dollar, I'll have to check why. Maybe it's a different broker. Let me check, because I'm using this is FX here. Let me see your wonder. Yeah, it's a wonder. That's why. And I think the trade was given, when was it given? Nope, that's not supposed to give you a trade there, right? That is supposed to give you a trade here, not here. So that's not a valid trade. It's supposed to give it to you here. I don't know why it's giving it to you there. I think it might be, yeah, I know why. It's time, time of the day. It's time of the day related, because that time, unless you have your settings to give you trade ideas outside the busy time window, then it will give you the trade idea here. But because it's set to give you trade ideas during the busy period, so it might be set from 5, that's when it gives you the trade idea at that same level. But it should have given it to you here instead of there. I use the FXCM. I use the FXCM. All right, so I think that's why it gave you the trade idea there, but it's already gone to fulfill the idea, because this is where it's supposed to give it. So if you take this with that stop loss, obviously it might stop you out. Yeah, because it's coming back into a pullback. So if you're taking that, it's gonna stop you out. You just need to understand when it was supposed to give you the trade. It was supposed to give it to you here, like for example here, right? It gives to you here, not back when it's coming back up here, but it gave it to you there because of time of the day, right? It could have given it to you there, but sorry, that's different day. Yeah, same day, but it gave it to you here because the logic that it uses to give trade idea was not fulfilled here. It was fulfilled there. That's why I gave you the trade. The logic that it uses to give trade idea was fulfilled here, but the time of the day that was meant to give the trade idea wasn't good, so it filters out the time of the day, right? But then it actually gave all the TPs because it was easier to take out this low than actually taking it now, because now it's pulling back into this range. Okay, right, the next question. Okay, Bear with me as I remove this, whoever is. All right. I'm selling GA back to OT at 1.748, where AUD news spiked yesterday. Let's go and check it out. Oh, GU. I don't have GU. Haven't looked at GU in a while. Okay, GU is in a pullback. It's in a pullback into that dealing range on the daily time frame. So yeah, so that was the 70.5 retracement level, previous week's range. It's not a bad sell. Yeah, it's not a bad sell. So I will look at, I'll look at 17500. So I'll look at 17500 as the next downside objective here. All right, and that's where I'll look at. And you saw what I did, right? I just looked for a dealing range and I measured 50%. 50% is here. So it's counter trend. So that's where I'll expect them to go. Okay, we've done almost an hour and 30 minutes. Any more questions? I'm not trading it. I'm not trading that. I'll not be trading that news, so I'll try and get myself out by before that time. I've learnt the hard way, so I'll make sure by that time I don't have any pound pair as a trade. It's just a peace of mind. All right. I think we have 4 minutes. I'm just gonna use that 4 minutes to talk about short-term trading, if I can. So, one of the forms of trading that gives you peace of mind is short-term trading. You will get price to move, not in a a crazy quick environment, and it's not gonna take weeks for it to complete. So by using the short-term trading approach, it kind of gives you in between where you can still have your day job and so short-term trade. All you have to do is do your analysis and then have some alerts, so that when you get alerts, you can trade your levels. Now, the best time frame for this approach will be using the 1 hour as your entry. Okay, 1 hour time frame can give you so much in terms of movement that doesn't require to be stacked in front of the screen. You can trade OTEs on 1 hour. You can trade auto blocks on the 1 hour. It just gives you that peace of mind to still do your work, still have a normal life, and still be able to trade. So if you're looking for a way, to be consistent, I have tried it all. I've tried swing trading, I've tried scalping, I've tried day trading, and I've tried short-term trading. And in doing that, swing trading and short-term trading has been the most profitable for me, because I do have the patience, so I can wait for price to do whatever it wants to do. Anytime I moved into day trading or scalping, it was just a complete disaster, because the mindset is not cannot tolerate that quick movement. And not just even that, because doing that also you have to have the skills, because what the day trading and scalping does is you are trading the intraday chart. You're looking at what the price action is supposed to be doing intraday wise, and that can be sometimes challenging, because the daily or the H4 price movement is always going to be dominant, and at any given point in time, the lower time frame can switch and move in the direction of the daily or H4. So it then makes the lower time frame trading sometimes a little bit challenging. I'm not saying it's not possible, because people do it, but if you are developing, right, it's an advice. If you are developing, if you're now learning, if you don't know what you're doing, I don't recommend going scalping. I don't recommend going day trading. Short-term trade. Let the charts give you time to process the information that you're receiving, because you're not used to it, and you're trying. It's like you're now learning to walk, but you're running, right? You're gonna fall down, because any kid that is learning to walk, right, you first need to take baby steps, and then once you get grounded, you can start running. But if you are now trying to walk, you don't want to be running, and that's what scalping is. You just processing information too quick, and sometimes it can hurt you. So take your time and use a slow approach to learn the skill and get grounded, and then over time, right, you can master the art of scalping, because Once you understand intimately your higher time frame, then you can navigate in the lower time frame. Don't start off by looking at what other people are doing and thinking, okay, I think they are making lots of returns on their trade, so I'm gonna trade the lower time frame. If you do that, you'll be just shooting your own foot before you start even to run or walk. Okay, so my advice will be, take your time and trade the higher time frame. 1 hour is enough. The 1 hour time frame gives you enough setups. I used the 1 hour time frame in passing 3 funded accounts, right? I used the 1 hour time frame and passed 3 funded accounts, just trading what I just showed you here. Trade OTEs, trade auto blocks, trade breakers. That's all I did, and I passed 3 funded accounts. Okay, you don't have to be on these super lower time frames to be profitable or to get quick returns. They have their benefits because you can pass it very quick, but then you can lose it very quick as well. And with the higher time frame, it takes time. If you're going to blow an account on a higher time frame, then you absolutely not know what you're doing, because trade ideas don't set up, right? Trade ideas don't set up frequently on the higher time frame. Did I quit my job? No, I didn't quit my job after getting funded. Once you get funded, you have to trade to make money. Why would you quit your job when you get funded? You need to make money. Trade in the funded account first. That's why I'm recommending the higher time frame. Whilst you have your job, take your time to learn the skill and trade a higher time frame. Once you've acquired the skills, you still be trading the higher time frame to make money and then build up some capital. And then once you've built up enough capital to sustain yourself, you know your lifestyle, to sustain yourself, then you can move into I would say quitting your job. But I did a lesson the other day with my private group, and I was telling them about sorry, there's someone that is spamming the chat, so I have to remove them. I was telling them about they've made me lose my whoever it is has made me lose my thought process. I need to recollect my thought process. Why do people do that? Let's remove them. Okay, sorry, bear with me as I remove this confused individual. Okay. What was I saying? Moving into yes, I was telling them about how when you're trading, you don't have to solely rely on trading. There are so many other avenues that you can make income from, but you need to know your skill, right? You need to know what you're doing. So know what you're doing first, in and out. Be confident in what you're doing, in and out, like me. Okay? And once you are confident with what you're doing, in and out, trading is an income, giving service is an income, mentoring people is an income. Okay? So you can make different avenues of income once you know what you are doing. But until then, you cannot use trading alone as your income, because then you'll be it's like, if trading is your sole income, you will force to make the money. And we don't force setups, you don't force trade ideas. Trade ideas has to present themselves to you before you actually take them. So if you try to force the trade ideas, what you eventually end up doing is you will break, because it's like, my rent is due and I haven't made my return for the month. How am I going to pay my rent, right? So that's why you need to know what you're doing, in and out. Save a bit of money. You can still, work part-time. That's what I did. I didn't completely give up my job. Okay, even when I knew what I was doing and I was funded, I still had a part-time job. I moved from full-time to part-time, right? I would say mine was a divine intervention, because the work that I do, the work that I was doing, they don't offer they don't offer part-time. But because I was a very good worker and I had been there for, I think it was my third year, I can't remember, and I went in there to tell the boss that, I'm quitting. I'm quitting. And he went, no, you can't quit. I was like, yeah, I want to quit because I have this situation. I was not going to tell them that I'm a trader, so I'm going to quit. No, I told them that I had this situation at home, and I can't do this. And he went, oh, how about we offer you part-time? And I was thinking, oh, okay, that's what I was going to look for. But if you're going to give me part-time over here, that's even better, right? So then they offered me part-time, and then I did the part-time while still doing everything that I do. Okay, so don't quit your job completely because you think you know what you're doing. And it's gonna be something a little bit challenging when you're trading full-time, because now you depend on your own abilities. Okay. So yeah, daily for high time frame analysis, entry on 1 hour, H4 15 minutes. Is that right? Yes, I use the daily. That's what I said. Use the 1 hour. So no 15 minutes. I don't recommend 15 minutes. You might use it and it might work. If you are experienced, that's fine. Okay. If you are experienced trader, H4 15 minutes is fine. But if you are not experienced trader and you are starting off, don't use the 15 minutes. I recommend 1 hour time frame as your entry. So you can do analysis on monthly, weekly, daily, and your entry is on the 1 hour. Okay. If you get good at the 1 hour, obviously as you spend more time doing it, you're gonna grow in terms of understanding in price action, and then you can then move into these lower time frames using the 15 minutes, using the 5 minutes, because you've grown in understanding of the market and in understanding of yourself as well. Then you can use those time frames to take your trades. Let's go and see. British man gave 2 entries. Nice breaker entry. All right, so that's my little discussion about short-term trading. In my opinion, it's the best. It gives you peace of mind. It doesn't give you that social media status where you take these trades with 15 hour, 20 hour, but it gives you consistency. All right, so that's it from me for today. I will touch base with you on Friday, and then going into next week I have a surprise. Going into next week I have a surprise for you, and yeah, so next week Wednesday you will see the surprise. All right, so enjoy the rest of your day, stay safe, and I'll see you on Friday. Take care.